Hello, Anthony.
Hello, Claudine.
We have a very special show today, two
Yes.
really awesome guests.
Yes.
Now, you and I attended a hearing in Washington, D.C., April 26th.
That's right.
It was the Subcommittee on Government Operations. They heard testimony regarding the unintended consequences of the Foreign Account Tax Compliance Act, otherwise known as FATCA. We'll be talking today about the proposal of the same country exemptions that was suggested by the Democrats, specifically why that proposal won't work. Now, we heard testimony from a lot of people. We have two guests today. Our first guest is no stranger to our show. Welcome back to Keith Redmond. He is constantly hustling behind the scenes. He works tirelessly to help expats, accidental Americans. He's part of the team that's working so hard to get FATCA repealed. So thanks for coming back on, Keith.
Well, thank you for the invitation. Good morning.
Now, our second guest is Mark Crawford, who was one of those who did testify
Yes.
at the hearing.
Yep.
Mark is an entrepreneur.
To say the least.
To say the least.
Yeah.
He literally travels the world for work, also often advocates to help bring U.S. businesses to foreign countries. So, Mark, so good to hear you again, I guess.
Yeah.
Yeah, thank you very much for the invitation.
All right. Now, we want to talk specifically about the Democrats, specifically Congresswoman Susan Maloney. She had a proposed change to FATCA instead of repealing it. They suggested a same country exemption change to the law. Under this change, U.S. citizens living overseas would not have to report their financial accounts held in the same country they're residing in, which in theory, I guess, if you don't know much about the law, sounds okay. But Keith, I want to start with you. Why do you think this proposal won't be helpful specifically to U.S. citizens that live and work overseas?
Yeah, well, for a few different reasons. Let me just preface what I'm about to say is that, as an American overseas, our bank accounts where we live are our local bank accounts. They are not overseas accounts. They are not offshore accounts. Actually, our overseas accounts are any accounts that we may have in the United States. And I think that's very important for the audience to know that they are local accounts.
Right. So the whole name of it, we have the name of the Foreign Account Tax Compliance Act. Well, that's sort of a bit of a misnomer because that foreign isn't foreign to you.
Exactly. Now, when it comes to the same country exception, now I am under the belief and hence the reason why I work closely with Republicans overseas, that FATCA is unconstitutional. Therefore, there is no fix to an unconstitutional law. Having said that, if we did take a look at same country exception, I think one has to really take a look at how this proposal has been put together, not just by Democrats abroad, but also by American citizens abroad and other organizations who support this. And it's taking a look at putting a fix to a law that has created a lot of damage. And I have spoken with banking executives in many different countries to find out what the crux of the problem is on why U.S. Citizens and U.S. persons, as outlined in the FATCA agreements, are being refused or being thrown out of banks. It has nothing to do with where they live, full stop.
Mm-hmm.
It has everything to do with the 30% withholding penalty. They do not want to take the risk. They do not want to take the risk to have U.S. citizens or U.S. persons. Additionally, with the same country exception, it creates another layer of administration, of paperwork, in ascertaining who is a bona fide resident and who is not. And one has to take a look at what the definition is of a bona fide resident as it pertains to the IRS, in concert with what the definition of a bona fide resident is as it pertains to that particular American overseas and his or her country of residence. They may not be the same. And how do you reconcile that? You also have a situation where Americans overseas maybe be a bit more transient and move from one country to another, and certainly they do need to have an account back in their home country, if you will, or their preceding country, to maybe pay for a mortgage on a house, they have investments, they have, a checking account, a savings account. It's like moving, let's say, from Texas to New York. Same situation. And so it's not feasible to have a carve-out for a small population of Americans overseas when the entire population will not be served by this, as well as the other populations which are being damaged by FATCA. So that, in a nutshell, are the reasons why same country exception will not work. It cannot be looked at within a vacuum.
Do you know of any, I'm going to put in air quotes, foreign bank that said, yes, if with the same country exemption, we'll be happy to take American customers in that country? Have you heard of one?
I've heard of one small bank.
Oh, okay. There's
in
one.
Scandinavia. However, the banks with whom I have spoken, and these are the major banks in the various countries, have said all collectively that does not solve the problem.
Yeah.
U.S. citizens and U.S. persons are toxic as a result of FATCA, and we do not want to have them on board because we cannot risk having just one recalcitrant account to risk the 30% withholding penalty.
Wow.
So one,
think about it.
one would trigger it, right? I mean, one account holder, would that trigger 30%?
30%. So think about that. If you have someone who, let's say, is in France, okay, and let's say there's a same country exception, and they're a bona fide resident and deemed such, they're in France, and they happen to move, and they forgot to inform their bank because everything's done online, or the bank maybe did not send out a form to update its entire database. If they are caught, that 30% withholding penalty will be in place for every transaction of that bank because of that one error.
That's
so it
insane.
Solve the problem.
Yeah, and so I mean, and just so people understand, you're talking about any transfer from a U.S. financial institution. So anything coming in from a U.S. financial institution, we're just going to take 30% off of it for
as a penalty
for indefinite. So there's simply, I can't think of any financial institution that sort of has the margin to support, taking that sort of blow.
Right.
No way would you risk your entire bank because for a few Americans. No way.
Mm-hmm.
Exactly. And I think, when it comes down to these, again, this is why I'm working with Republicans overseas, whether one is a Republican or not, they are there to fully support and defend the rights of Americans overseas. I'm sorry, I've been working on this for a long time, and I've been very silent in my positions with other organizations. But the other American overseas organizations do not put this as a priority. And I know I'm going to get a lot of pushback on this. But if you are a supporter of same country exception, how can you be a supporter of residency-based taxation? They cannot coexist.
Mm-hmm.
Yeah, and I think I've been noticing your frustration come through, and I think, and I could easily see why, because their position is just, it doesn't make any sense. It absolutely doesn't make any sense. If they truly do represent Americans overseas, you can't possibly be for this. And some of the people I did meet from a few organizations, they agree with the fact that the banks aren't going to really do anything. Yet still, we think the same country exemption is a good idea. And I just can't figure out why they would get to that. And I'm just thinking it just has got to be a partisan politics at play where we're all trying to cover up for the Democrats who voted for FATCA. Nobody really wants to admit a mistake, so it's much better to throw out a claimed fix to the problem than to actually fix the problem, because fixing the problem will be a tacit admission, oh, wow, we did something wrong, and nobody wants to do that.
What's funny, too, is last week we had Michael Edwards of the World Council of Credit Unions on, and they don't like FATCA. That's speaking volumes.
Yeah, the U.S.-based credit unions, foreign credit unions, both don't like FATCA, both want it gone.
Mm-hmm. And I want to now bring Mark into the conversation here, Mark. You gave some really great testimony at the hearing about how FATCA has affected your life. So Keith can give really good insight on expats and accidental Americans, but I want to get your take on the same country exception. In terms of entrepreneurs or businesses, why do you think it wouldn't help them?
Right. Well, in addition just to starting my own businesses, I also serve on the board of a bank currently, and I've been involved with the startup of 3 banks in the Balkan region over time, so I'm fairly familiar with their perspective. One of the things I did get a sense of when I was talking to the committee was that the members on all sides felt that the status quo wasn't acceptable. So even the members who are promoting a same-country exception saw that the harm that FATCA is doing as it stands today is not acceptable. And so therefore some changes should be made, and now we're discussing what those changes could be. And I'm actually going to be responding to some questions that were mailed to me by Chairman Meadows, which will go into the record of the hearing as some ideas about how to address some of the problems that we have, including full repeal, which is something that I support. I think that some of the concerns that I have about same-country exception assume they are based on the idea that every single American abroad is monolithic and that we're all the same and we all do the same things and we're all moving abroad to one location and we're going to stay there for the rest of our lives. And in my experience, in my own life, that just hasn't been the case. I've taught in China. I was a graduate student in England. I lived on the beach for a year in Greece just for fun. I've been a resident in a number of different countries. People that I meet just this week, the teacher of my second grader is an American from Florida. He used to teach in Egypt. He moved to Albania. I'm going to meet with an Albanian-American banker later today. He's been everywhere from Miami to New York to Albania, back and forth. So even if you come and you let's say, create a residency, it could be that you go back to America the next year, and then your account with that bank in that foreign country is no longer an account of a resident because that person has moved away. And so I think that the banks will look at this and just see that there's so much contingent liability because they're not only going to have to figure out who the Americans are, but every year they're going to have to figure out where they're living. Are they still in the country? Are they still a resident? Often people get residency and it's not permanent residency. It's just for a year or two. And that happens with business. That happens with just personal situations. So I was on the plane over to Albania. I just arrived yesterday. I'm calling from Albania, actually. And I was with an Albanian-American professor from Harvard, and he goes back and forth all the time between Boston and Albania, and then he does work in Sri Lanka as well. So it's just not reasonable to think that we are all monolithic, that we move to just a single country and we just stay there for the rest of our lives. I personally have businesses in a number of different countries right now. I'm not going to go and establish residency in order to open a bank account in all of these countries. So it's, I think, an idea that someone came up with, but it's with a very narrow perspective of how to solve the problem. I know that as a banker, if I was in a bank that had no American ties, that wasn't using the American brand as a marketing tool, which the bank that I'm involved with now does, I definitely wouldn't accept any Americans, even though I am American. In my brokerage firm that I referred to in the hearing, we won't be accepting Americans, even if there is a same-country exception, just because I don't know where my clients will be tomorrow. So they might be residents today, but who knows where they're going to be tomorrow. And the contingent liability of dealing with that account, should it become non-compliant, even if it's compliant today, is just too risky.
And you bring up something there, Mark, that made me think of a point that Anthony had brought up, that someone with resources, this actually could help them to evade taxes if they have the ability to do multiple addresses, right, Anthony?
Yeah, if you want to have multiple same countries you could live in, this would, I think it was Mark, I think it was you who said, look, if we want to have a law where we stop everybody on the highway to see if they have some sort of, they don't have their seatbelt on, we could do that, and we'll catch people without seatbelts on. And likewise, if we have this law where, look, everybody we're going to stop, you will catch people who are engaging some sort of tax evasion. I just think we all agree that the amount is so minuscule and the burden is so high, it's just never going to be worth it. But what the same country exemption does is it sort of tells that person who's not wearing the seatbelt, hey, get off the next exit because there's going to be a check ahead. Because what they can do is if they are the fat cat, they can have the resource to say, oh, here, I'll just get an address here. I'll get an address here. I'll get an address here. And so now I don't have to report this. I'm not going to report this on a Form 8938. And now I know the bank is never going to share this information with the IRS. And now I know I probably won't have to put this on an FBAR either. So now I can avoid all those all the reporting requirements. So the people you were trying to catch just sort of said, oh, great, you've given me the exact opportunity I was so that I could avoid this entirely.
Yeah, the folks that I know, they're not trying to avoid taxes. They'll pay whatever is owed. certainly it makes a lot more sense to have a territorial taxation system, which even the socialist countries in the world have. So we're really in the minority, and I think it was a bit of a concern to many who heard the testimony of the ranking member who said that everybody else in the world is doing the same thing we're doing. That's actually not the case. It's really just Eritrea, and I guess in some ways implicitly North Korea.
Well, North Korea's tax-free paradise. They will tax you if you're a non-North Korean resident on your worldwide income. But as a North Korean citizen, it is a libertarian paradise of sorts. No taxes.
Yes. It's all, I guess, implicit as it was in Albania years ago.
Yeah, I think a couple things that that I heard at the hearing, Keith. I think this was one of the points where you were shaking your head as we were shaking our head. They kept referencing, expats as wanting to avoid taxes. Well, if you would just pay your fair share. I kept I wanted to yell. They're not trying to pay taxes. That's not what they were talking about.
It is an expression which I don't understand, and it's quite used in such a trite manner. Pay your fair share. Nobody's able to explain what pay your fair share actually means. And I think it's important for people, for your audience to know, is that it's not a question of Americans overseas they're not willing to pay taxes. Of course we are. We pay taxes where we live in our country of residence. We have the equivalent of the IRS, in which we have to send in not only our tax filing, but any type of payment for taxes for where we live. So it is a misnomer to say that we do not want to pay our taxes. And in fact, we pay more taxes probably to our country of residence than we would if we even lived in the United States.
That's exactly true, and that sort of leads to the other part of this. When we have clients with just even a few complications to their returns, such as a so-called foreign pension, maybe they're even a business owner, and a small business owner at that too, not anything extravagant, they'll end up paying $2,500, $3,000 for a tax return so that they can pay $200 to the IRS. And I think
zero.
Or nothing at all, right? Because that foreign income exclusion or credit, either one, makes it not even, you don't even have anything due. So, this is sort of the whole, what I was getting through this whole thing was a complete lack of understanding and really a lack of curiosity of how things are done around the world and how things are actually impacting people. I think, one of the things you talk about, Keith, is people being in this bubble. And man, that bubble is so thick that they still are convinced people are going overseas to hide income, and that's the reason why. Not that they want to live a happy life, and that's where their life has brought them.
Trust me, people don't go to France or to Sweden to hide their income.
I'm trying to think of how many clients we have with issues, and the reason they have issues is because they fell in love with someone from another country. Yes. Literally, I talked to 3 people yesterday that, one fell in love with a French lady.
Yes.
One fell in love with an Albanian. It's the way, the ways you can end up overseas because of love or businesses
or desire. Or willing to explore other parts of the globe.
And that's
that's our right as an American.
Yes.
Yeah, we have a tax code. Yeah, we have a tax code to say that's not good. You should your freedom to do anything in the world you want, because anything in the world means anything in the world. But we're going to say, well, in the world we meant in the U.S.
Right. So
one of the interesting things that I saw when I was in Washington, D.C., I stayed with a couple, and she's British and he's American, and they met abroad and then came to the United States and are working in Washington, D.C., and she came to me and she said, I'm now considered a U.S. person, so all of the savings that I had, let's say, gathered before I got married and moved to the United States are now in accounts that are subject to FATCA, and I can no longer invest my money that's abroad. Mm-hmm. So I'm not American, let's say, and moved abroad. I'm a foreigner that married in America and moved to the United States, and all of a sudden FATCA is catching my wealth.
Yes. Mm-hmm. Yeah, FATCA.
And so it's another impact that's being had. So anybody that's in the United States that may be a U.S. person, if you have accounts that you've had previously abroad and you have any balances there, those may be kind of orphaned.
Yep.
And I have to add to what Mark was just talking about, because I deal with a lot of other countries' expats who live in the United States, and they're not American, and many of them are not even green card holders. And yes, they are here in the United States legally. However, they're identified as a U.S. person under the FATCA Intergovernmental Agreement. So, for example, that means that if you are a Frenchman living in the United States and you have a U.S. address on file with your bank account back in France, your bank account can be closed because you have U.S. indicia. That means if you have a mortgage back in your home country or retirement, etc., the account is closed. And same country exception will not help these people. Again, it's a carve-out, for a small segment of the population affected.
Right, because you don't have to be a U.S. person for FATCA to apply to you. You just need to be
or a U.S. citizen.
Or U.S. citizen. You don't have to be a U.S. person.
Called a U.S. person.
U.S.
indicia.
You just have to be suspected of being a U.S. person. And I would say that I've noticed that it's the UK residents seem to be hit with this a lot because I think there's the most UK visa holders come than any other country. A lot of them come here, work in the U.S. for 3 or 4 years, and then maybe they go back or they go to Costa Rica to another country. Yet now they're having a problem. Their bank says, well, we do see this address you once had in America, so we're going to suspect you of being a U.S. person. And now they're begging and screaming to say, no, I'm not. I was there, but I'm not here. I'm British. Here's my passport. And now they're in a difficult position of trying to prove a negative because, again, if this bank is wrong about it, it's only 30% of all inbound payments from the U.S. that will cost them. So not a lot of people are willing to take that risk, even though FATCA itself says you cannot discriminate against U.S. persons, but they all do.
Right. It's already there. It already says it.
Right. We already have the exception.
Yeah.
Oh, don't discriminate against U.S. persons. Well, they do because there's really not the enforcement mechanism they have on that. Mm-hmm. They do have the enforcement mechanism on inbound transfers to these countries, but they don't have any way to make sure they're not discriminating against U.S. persons.
So I want to pose one last question to both of you. Mark, let's start with you. How do you think the proposal is actually worse than doing nothing at all to change the law, or do you think it would help?
I think all of these carve-out kind of ideas will make it worse. Banks will have to revisit their compliance. It won't actually solve the problem. We'll have more hearings to decide what the unintended consequences of the carve-outs are, and we'll have more press conferences, I guess, to follow up on that. But we won't really solve the issue. If we're really trying to solve the issue that FATCA was originally intended to address, it was intended to address a revenue offset. So we should put our time and energy towards things that create revenue for the IRS, if that's what we want to do. If we want to stop, let's say, money laundering and some of the other things that were mentioned by one of the members, we've been doing that long before FATCA in the banking sector, and we should just continue to put energies towards anti-money laundering and anti-trafficking and things of that nature. So I think that the carve-out is, let's say, going to make it worse. It's going to take us down a rabbit hole and not really solve the issues that we want to solve. I would just go back to the original intent. Let's try to increase revenue as an offset, and it can probably be done in better ways than FATCA was designed. And I don't think FATCA can be fixed. I think it just needs to be repealed.
Keith, same question to you.
I certainly concur with what Mark said. I think also, in addition to that, it does make it worse because banks, foreign financial institutions, are already angry at the United States government with the forced upon of FATCA. And adding another administrative layer to this law is just going to anger them further, and it's certainly not going to bring in those Americans or those U.S. citizens and U.S. persons who have been denied their accounts. Point number one. Point number two, on the U.S. side, it makes it worse because those who support same country exception, should that go through, they will say, well, this is our resolution to the problem. So this is what we can do for you. And it's taken us this long, so let's move forward with this resolution. And it'll take that much longer to realize like Mark said, the unintended consequences of some carve-out fix that is not going to really help the affected populations. And again, I will reiterate, those organizations who support same country exception, I don't understand how they can support residency-based taxation in the same breath. It's not logical.
You know what? I think Keith, maybe next week we can have a podcast. I think we could talk about that for at least 30 minutes.
Yeah, maybe that deserves some attention.
So I want to thank you both and give you a heads up. The next video we're going to do is we have a ton of contact information for the congressmen and women that were at the hearing, Elise Bean, Senator Rand Paul. So what we sort of want to do is basically blow up their Twitters and emails from actual people that this is affecting, not drug dealers and not terrorists. So keep an eye out for that video. We should be getting that done today, and we'll make sure we share it with you guys and our audience. So again, I want to thank you both. Keith, now you've got the Facebook page, American Expatriates, correct?
Yes, there's a Facebook page called American Expatriates. You can certainly search for on Facebook. Also, I have an email address in regards to contacting me directly, and that's US_overseas_advocate@outlook.com. And I also am a global advocate for Americans overseas, and I do work closely with what Republicans overseas are doing because they are fully supporting and defending Americans overseas. And I actually have established a GoFundMe page, which you can look up at American Overseas Advocate.
Yes, because you really do so much work, just basically in your spare time. so we definitely would like people to go visit that GoFundMe page.
Is that now that
Spare time?
GoFundMe?
What is spare time?
Is that Republicans Overseas Advocate.com?
No, it's not. It's what are you referring to?
The website where your
page?
GoFundMe page is, or is that?
No, that's actually it's GoFundMe.com
Okay.
/American-Overseas-Advocate.
Okay,
Awesome.
and that's that. We're going to put the link to that in our next video too.
Yes.
So people know exactly, and we're also going to put, we had Jody Heiss. He had some great insight there. He was really on his game there. So we'll have his contact information along with Mark Meadows, who I think really did a great job presenting the issues.
Now, Mark, you've got the Republicans Overseas FATCA lawsuit. Where can people find information on that?
Everything that we're doing with the lawsuit is through Republicans Overseas, and that can be found at the group website, which is republicansoverseas.com. If you want updates about information or updates about how to support the FATCA lawsuit in any way that you see fit, that can be found through the group website. So republicansoverseas.com.
And now, what about your IMDb page?
Yeah. I didn't ask you any questions. How difficult it is to be an international?
That has nothing to do with FATCA. It's just
Well, I was just wondering,
It's
and I was
just
like,
an investment of mine with some friends in a new movie that should be out later this year.
So
it was under the working title Lazarat Burning, but I think it'll come out under the final title, The Brave Ones, with Armando Sante and Louis Mandalore and a number of other actors.
So for the sequel, this is my question. For the sequel,
Okay.
when you're casting, are you going to be, because of FATCA, will you not be casting Americans in any of the leads? Claudia and I are very interested because this could really motivate us a little bit more.
You can trick it with a green screen, and you can be in Indiana, but you looks like you're in anywhere in the world. So, but yes, we did our filming abroad, and certainly we had Americans abroad, and we were working with an American film studio, which was American owned, and it was abroad, and so.
So you're just creating American
it's a real
jobs.
project that impact Americans around the world.
All right. Well, again, we want to thank you both so much for your time. And if anyone would like to contact us, they can email info@IRSMedic.com. Call us at 888-727-8796. You can like and comment below. Make sure you subscribe to the channel so you get all the updates on FATCA and other awesome tax info. We want to thank you guys so much for joining us and thank everyone for watching.